Hey everybody, Brian here from quantlabs.net. I'm going to be talking about the mechanical methodologies I'm using to rank a variety of opportunities in forex trading pairs. So over the last week or so, I put out a slew of videos. The first one, historically, this video 6 days ago, new technical analysis on many forex pairs for February 21st. In there, I talk about trends, Fibonacci retracements. And then this video 5 days ago, I put out new moving average technical analysis on many forex pairs, or just verify that in a minute for those on the podcast. Hang on here. Hi everybody. Okay, so new moving average technical analysis on many forex pairs. So I talked about the charting in there. Then I put out another video earlier today called Update a Statistical View on Many Forex Pairs. So combined with these three charts and how I generate these this content, I'm going to show you what I've done. So everything's written in Python. These are the four files we're referring to. So on February 21st here, I looked at a variety of forex data from being pushed from JForex from Dukas Copy. So that's data right out of my potential broker, Dukas Copy. So out of that, I've generated all these different types of data. So now what do we do with all this data? So here we have four different Excel files, or XLS, which are basically data frames from Python. And I'm going to show you how we work with it. First, let me show you the easy one, trend. So I use LibreOffice, which will load up the database, or sorry, the data frame. And what I have shown in those four videos are the four views: hourly, the 4 hour, and basically the daily view of the last 500 data points. So they're all the same for all of these pairs, and there's only 13. So in there, I've put in, for this one, trend. We're just measuring the trend of, for example, let's say this trend line here for Euro British Pound daily. So that's what we're charting. These lines right here in the green and red. Okay, so we have a max and min of each time frame. So we have basically the max, which is the green, and then the min, which is the red line, which is the equivalent of support and resistance, you could say. So what we can do is, I've gone into detail on what we can do with it in that one video. Let's see here, new technical analysis on many forex pairs on February 21st. So explain what I plan to do with that, these trend lines. So because I'm able to now sort them and have them represented in a data frame, or in a table, obviously, what we can do, we can sort them and rank them based upon trend. Now, these are the gradient of the slope of the angle for both lines, for the green and red. So they're somewhat normalized. So what I've done is I've done the first sort on column E here, max 500D, using sort, and then let me just show you what I do. Pretty simple stuff. And I can do the same thing in a data frame if I want to fully automate it. So I can sort, we are going to sort column E and descending. Okay, that's basically how we do that. So column E is this one right here, maximum 500D and the day. So here we can see the ranking: Canadian, US Canadian, US South Africa, Euro Nokia, USD, Euro Norwegian kroner, and USD Norwegian kroner. And if you want the Euro Swedish krona. So let's say the last top 5 pairs, I can use that and feed that into some kind of money management system. Say I want to trade these 5 currency pairs based on trend. I mean, these are the daily trends. These are the steepest slopes that we have, which means they have the highest rate of return daily over the last 500 time periods. Now, of course, I could change this 500 to whatever I want, but in this case, it's about a year and a half, which is pretty good. And hopefully you've seen in my other videos I've listed that you could break down further by looking at the 4-hour or the hourly to get a better handle on timing. And we'll talk about that in a minute through the Fibonacci retracement. But you can clearly see here that there's trend. Okay, so right now we've got the US Canadian dollar has the steepest long-term trend, highest rate of return. So then when you move into other charts, namely, let's say we look at, where's the stats one? Okay, where are my files? Okay, I'm looking for my Excel files here. Okay, before I do that, I just want to show you the trend. So if I look at the USD Canadian trend lines, this one, which has the steepest angles or slope, you can see here the resistance is very steep. Okay, that's the red line. Okay, so comparatively, that's probably true based upon the data we're seeing here. So with that in mind, we can now look at other Excel files, if I can find them. Let's see, we are looking for Excel right here. Okay, so using that, we have a number of ways of confirming that. So let's say if we look at the stats on the same data set, same time periods and all we really care. Now, if you watch this video I put up earlier, this one, updated statistical view on many forex pairs, this is to confirm my theory. So in there, I really only care about this number right here, number of positive returns, really. So the one we're looking for is the same daily chart time period, so it would be this one. So if I was to sort this this spreadsheet here, I'm just going to do this. Give me a second. And we also have standard deviation and mean and all that. We could try and confirm the theory here. So if I do a sort, let me just make sure I got the right. So we want to do a sort on number positive. That's H, column H. So we do column H, descending. What do we have on top? Not quite, but we do have the USD Canadian in the top 3. Number of positive returns long term is here on the one, I'm sorry, on the right here, which is number 3 according to this column here, number of positive returns. But when you drill down into 4 hourly, it looks like the Canadian, US Canadian is got the most number of positive returns. And then again, if you want to look at intraday on the hourly, we have the the USD, Hong Kong dollar. So knowing all this sort of stuff, we can build some kind of overall ranking for all of these currency pairs versus some kind of algorithm using all these different techniques. So let's just check out the mean on the dailies. So we are needing to do this on column E. I find this stuff very fascinating because it will tell you quite quickly the theories, if things are right or wrong. So here, funny enough, the daily mean is more negative. But if I was to look at the stats, the distribution, be sure if I'm in the right folder here. We want the stats folder. Now again, this is fully automated. So if I want to confirm that, what we want is the USD for USD Canadian stats distribution. So let's just get a rough eyeball on this, because you really can't tell that this would have the higher rate of returns. Whereas if we did, let's say, a 4-hour, again, we wouldn't know. We wouldn't see this. But the data clearly reveals that this has the highest number of, or has the steepest curve on the daily chart, which is quite odd. Okay, so let's just assume that we are thinking, let's pull up my trend here. So we've confirmed, let's say we just think that the US Canadian has the strongest trend long term with the highest gradient. We also have the USD, Euro Norwegian, and the USD Norwegian. So let's see how statistically how this ranks. So once again, let's sort this and sort by column E, number of positive returns, or no, column H for end of day number of positive. So just give me a second here. Okay. Now again, I can do all this automatically. I just want to show the mechanics of everything here. So we are going to sort on column H, descending. Okay. So here, once again, on our daily number of positive returns, we have here the order in this order. So if I do a comparison between these, let's say, top 5, it's quite odd how, there's really no relationship here. So again, we need to figure out the relationship, if there is one, between trend and statistics using these number of positive returns. Okay, so let me show you some other Excel files I generate. The other one that I find quite fascinating is moving averages. Now, according to the theory is, what we have here is we have moving average, low, 1 hourly, long and short. So for instance, what we're saying is we are using 3 periods. So let's say, just out of curiosity, GBP and USD. So again, we are looking for GBP, USD, we are looking for this one right here. Okay, so what we've got here is we've got 3 moving averages on the daily. We have 50-day, 20-day, and then we have this 200 moving day average, which is an EMA, because it's more responsive. So what we're trying to determine is if our 200 EMA is higher than the 50 moving average, and at the same time we are also comparing the 50-day moving average against the 20-day moving average. So this is how we interpret this in this file. So what we've got here is, as we know, we have different periods. We have daily, 4-hour, and hourly. So what we're doing here is a moving average, number of instances where our long of the 200-day is more than, or I'm sorry, the 50-day is more than the number of, so the 20-day has to be higher than the 50-day, which would be this one, or the 50-day moving average has to be higher than the 200-day. These are the number of instances that we have in both cases. So in our case, we have 214 instances where the 20 is higher than the 50-day, which means that may present a buying opportunity. And in this instance, the 50 on the long, that would mean 200 moving, the 50-day moving average is higher than the 200-day. So these are buying opportunities, another way of saying that. So if I was to sort on either of these, on the same periods though, they should be in the same order. So let me just pull up another instance of this chart if we can do that. So we want two instances of the same chart. So we want moving average. Hopefully this will work. I don't think we can. No. Okay, no problem. Let's just do it this way. So we're going to do a sort on column E. Sort column E descending. So what we're seeing here is there's more buying opportunity long term with the British pound against the USD. Now the next question is that the case with, so I say that because the 50 crosses is higher than the 200-day moving average. These are the number of instances of those crosses. Here we are going to figure out how many instances of the 20-day cross over the 50-day. So in that case, we have to do a sort on column F. So let's see what we do here. So column F. So in this case, oh, yeah, that's not a good way. So we have here the USD Hong Kong dollar short term. Oh man, I'm getting my time periods messed up. Okay, so we want column E and column H. Forgive me on that. So let's just do column H first on the, this is confusing, this can be, but of course I'll build out a report on this to automate it. Oh, the whole thing might be wise to. So we want to do a sort on column H descending. Okay, so here we go. So the short time or short term, meaning a 20 crosses over the 50 USD Hong Kong dollar has the most number, and then followed by Euro, Hong Kong, Euro, USD, so on and so forth. So again, this is daily data. Okay, so let's see if we have the same order. Let me just copy this somewhere. Okay, let's do a text document. Okay, so that's our order for that. So if I do an order, so this is the short, this is the 20 crosses over the 50. So now we're going to do the 50 over the 200-day, which would be this one, column E. Let's see here, sort column E. Okay, so this is quite fascinating. We have the Euro Hong Kong dollar, still number two, Euro Norwegian number 3 in this case, Euro USD. So there is some form of relationship here on the short-term crosses versus the long-term crosses, meaning there is somewhat a relationship between the two periods. So what I'm saying is, in the top 5, even though they're not the same order. In this case, in this order, we have the order of the number of instances where we have the 50 crosses over the 200-day moving averages. And then here, this list is the number of 20 moving day averages crosses the 50-day. Okay, so there is definitely a formal relationship as a buying opportunity. Now, one way to gauge that is I've got another set of charts that we can use. Let's just load them up on a long-term basis. So let's just check out the USD Hong Kong. Let's see, which would make more sense to do. So yeah, let's do in this order on the order of crosses of the 20-day crossing over the 50-day. So we'll do the GBP USD first, just to see. So in here we have these buying signals. So we could do the daily. So you could see here there are a number in red, a higher number of buy signals. Also, continuing in that order, as I said, let's do the Euro Hong Kong. All right. So the Euro Hong Kong signals, same thing again. We have a pretty strong set of green of buying opportunities versus selling. Euro and Norwegian. Let's see that. So we're looking for the daily signals. Again, not as much, but there are definitely more buying than selling. And the next one would be Euro USD. Euro USD. Okay. Again, I would say the same. It's quite a bit. So this seems to, and then we'll do the USD Hong Kong. So combined overall, we should be able to find a overall ranking of what's the best trends to use using all these different factors. But I'm going to show you one more. So we have here the USD Hong Kong dollar daily. Oh, this is overwhelmingly more buys than selling on the daily. Okay, so knowing that, we can continue further analysis on probably the most important of all, Fibonacci retracements. Okay, so the usual periods of daily, hourly, and 4-hour. So what I want to show you is, it gets kind of weird how I did this. We have Fibonacci level 2 and 3 are the most important. So let me just pull one up of boom, boom, boom. Yeah, let me show you this one, US Canadian. Right here under the Fibonacci retracement, this is again using the daily. This currently is the best long-term buying opportunity, and I'll show you why. Right here, this would be the 0, level 2. I think that's level 3. Can't remember which levels are which, but really the important levels for Fibonacci are these two that are closest to the 0. Okay, so what we want to do is we want to find, in terms of buying opportunity, the closest to the 0 in between. And we do a quick analysis to see which pair gives us that opportunity on a long-term basis. So I can tell that US Canadian dollar is the closest. So what I've got here is I've got two fields two columns. And we measure the distance between Fibonacci level 2 and the closing price and the difference, and that's the daily. And then also the difference between the Fibonacci level 3 and the closing price. So essentially what we're doing here is we're trying to determine the closest zero between Fibonacci level 2 here in the red and that zero, or sorry, in the closing price, and also here the closest between level 3 and the closing price. So what we're trying to do is we're trying to gauge which gets us closest into this, basically this range, and the closer to zero we are, the better. Okay, so here we can easily sort these fields or columns. Let me just okay, so we are going to do the first one, column G and column H. So if I just do a sort on column G, so we are doing Fibonacci, this one, let's say, descending. Okay, so we're trying to get the closest one to zero, which could be this one, or this one. So am I just doing this right? Because this is really confusing. So let me think this through here. So we're trying to get the least. So I'm going to think the Euro Norwegian for this one right here, or basically, yeah, maybe it would be this one, the USD Hong Kong dollar as the closest to zero. So let's check that out. So we are going to look at the USD Hong Kong, this one right here. So we're pretty way off, but there might be other charts. They say otherwise. I might be a little wrong on this. So we got a 4 hour. Yeah, it's way off. Yeah, so I'm gonna have to figure that out better, gauge. But you want to get the one closest to zero as a buying opportunity, because you want to be, as I said, in this range on the Fibonacci retracement. So we have that ability. Just gotta make sure I get the calculation right, and then let me just make sure we got all the Excel files covered off here. So we got the trend, stats, moving average, buys. I think, yeah, we looked at that. So all in all, we are working towards these better ways of trying to gauge the currency pairs that are optimal for trading as an opportunity. Doesn't mean we have to trade it, but has a better outcome based upon all these different trends and metrics that we're using. Doing my best to try to interpret it, but this Fibonacci is still got to work on, I believe. But overall, I think it's a pretty strong case. Now, the other thing I'm building, or will be having, because in here we have just a gauge of, as I said, the best opportunity for long term. If you were to look at the trend, you could definitely gauge. You probably have a higher probability of doing well using, as I said, if we sort this on the daily, because it has the highest grade, and you probably would do pretty well with the USD. So alone on the trend, that's probably going to give you a higher likelihood of better returns. So let me just confirm that again on the USD Canadian. Let's see here. So we are dealing with this one right here. Oh no, it's a buy sell signal. We want the trend. Ooh, actually, I should correct myself. The long-term trend is down, so the gradient has probably a higher shorting opportunity, as well as, let me just check out the USD Rand. So we are dealing with this one right here. Again, yeah, these are shorting opportunities for sure. So if you have a strategy that is both long and short, you could definitely use this. Yeah, okay. So yeah, just see. This one might be what we're looking for the, just make sure, USD Hong Kong dollar. Making sure I get these. So it has the best. So I just implemented this strategy. So I think I got it in reverse. So looks like if we do the Hong Kong, USD Hong Kong dollar for trend, for long only, this is definitely the better one to kind of work with, looking at a trend here. Also, let me just check out the Euro Hong Kong dollar. But so we want this one. So again, yeah, it looks like we've got to reverse these, looking at them in the USD Euro. So actually, the lower the gradient, the better. So we want the Euro USD. If I remember, okay, we want this one USD. Yeah, so it's got a strong trend as well. So I had them in reverse initially. So if I remember, on the trend, when I looked at the same data here, it does confirm they are the two strongest charts or currency pairs with the longest or with the best or most steep slope. These two, well, these are the top three. So it confirms that. So the higher it is, the more negative it is. Okay, so but anyways, these are the mechanics of it. And as I said, what I'm planning to do is to build some kind of simple algorithm to overall rank all of these based upon the sorting, and somehow come up with something that would be consistent on the long-term trend of what would be the best currency pairs to trade using these metrics. On top of, you'd have to drill down further into the 4 hour, the 1 hour as well. Now, one of the things I was leading into was patterns, as well as pennants, flags, and wedges as well, to have those metrics confirmed based upon certain patterns to help here. Also to use pivot points as well. So hopefully these will help out to gauge better trading opportunities as time passes. Now, in terms of the currency pairs, I'm hoping to have 40, maybe 60, depending upon my access into what Dukas copy gives me. So I just want to show you the overall metrics used for this, and if you are interested in this, what I plan to do is to give in my analytics service all of these files. So you'll get the CSVs, the Excel files, the XLS files, the CSV files, the XLS files, on top of all the charts, all the different types of charts, which would be the signals and moving averages, the Fibonacci retracement for all periods of the daily, 4 hour, 1 hour. To generate these does not take very long. It might take maybe 5 minutes for how many pairs we got? was it 12 pairs. So, I take 10 minutes, 15, 20 minutes to do a complete analysis to generate these charts and files for trend, Fibonacci, moving average, and signals. On top of, there's the statistics that I showed also in this video as well. So, updated statistical view on many forex pairs. So what we're dealing with there is, let me just show you that one as well. Okay, so just find the stats stuff. Yeah, so here you get typically I showed this in that video, the descriptive stats. So you get, as I said, these are the only things I really care about, is positive and returns and negative returns. Really, I just care about the positive. I could also sort by the mean, the kurtosis, the skew, on top of the bandwidth for all the standard deviation, and the standard deviation as well itself. So we get that. Also to be included will be the normalized statistical distribution. Now again, these are the returns for the same time period as in the other analysis as well. So it's usually 500 points, but I could probably change that as I progress. So it's quite a lot of data. Now to get the proper data generated would probably take you hours, maybe days for the number of pairs. So this is all done automated right from the broker. On top of that, you get the automation to do all the ranking as well. So what I'm planning to do is with all these ranking and then get this overall ranking set up. What I plan to do is to run this analysis before every trading session. So there'll be like New York, Asia, so let's say Hong Kong or China, as well as London. And typically you run the analysis before the open, and you'll be able to determine what currency pairs you should trade for that trading session for that region. Based upon global volumes, you would definitely want to, okay, I'm Eastern Standard Time, so let's say I'm New York time. The highest volume globally is can be 1 or 2 a.m. as London's about to open up. I could confirm that. The pairs I see with a lot of activities, the Euro, USD, anything Europe with the Euro. And then between 4 and 5 it picks up, but where it really, the volume really picks up my time would be, around 4 to 5. Majority of the activity, at least from the Dukas copies, and which is out of Switzerland, but servers are out of there, there is a lot of activity overnight, my time, between, let's say, 1, 2 a.m. till about 5 or 6. And then it gets pretty crazy as there's an overlap between London and New York. So it really, the volume really picks up as London's there, but when New York opens up as well, which is usually, let's say, 8, 9, or even 10 o'clock, the volume can get pretty crazy. And they can pick up again towards 12 noon my time as the London time winds down. And then it stays quiet up until about 5 p.m. my time for Asia. And then obviously the Asian currencies will get traded. Usually it's the Australian or the Hong Kong dollar that gets a lot of activity. Not so much the offshore yuan that I've seen. I'm not saying it doesn't happen. It does get some activity. That's usually at that time between 5 and midnight my time, Eastern Standard. And then during the U.S. hours, you can get a bit of activity with the U.S. Canadian and some U.S. and Mexican peso as well. But then you get a lot of euro cross currencies with the euro as well overnight my time. That's what I've been seeing over the last 3-4 months. So trying to figure out all those patterns and volume behavior and trade accordingly. So do this type of analysis before the regional session. Allocate capital accordingly, because I have another portfolio optimizer. I hope you've seen that, where it will allocate capital based upon historical returns and expected returns, and allocate the position sizing. So I can definitely do that for, let's say, the top 3 to 5, and then focus on the ones that give me better expected return. So in that analysis, you will get a long only, long only, long short. Depends on the portfolio strategy. So in my case, when I'm starting out, I'll probably just stay long only. Then there is, as I get more comfortable, as I showed you on the trend by the gradient, if you want to short these kind of currencies based upon their higher trend, I guess you could call it, or higher gradient on the negative side, which is, these are shorting opportunities. I get more comfortable with it, then I'll definitely do that as well. And then as part of that portfolio optimization analysis, we also get Markovian with Markovian long only and Markovian short only. Now, out of that analysis, those 4 types, which is again long only, long short, Markovian long only, and then Markovian long short, you'll get an expected rate of return using all the major metrics like Sortino, Sharpe ratio. I'm sure there's a bunch of other ones, but depending upon the asset class and if it's highly volatile, you have to ensure that you're using the correct metric. So you don't want to just use, let's say, Sharpe only, because if you're in a highly volatile environment, you want to use a Sortino, because the Sortino will smooth out the ratio and take out that volatility, because the Sharpe ratio gets thrown off because of the volatility. So with that portfolio optimization, it will factor in all that type of analysis. I've shown these portfolio before. So if you look up portfolio optimization, you should be able to find the videos. Yeah, so here are all of them. So that's how you can do that. And then be able to size those positions based upon that portfolio optimization technique, with just, as I said, long only, and then long short, and use Markovian depending upon which gives me the better rate of return in terms of expected rate of return. On top of, I have another analysis script that will measure volatility by currency pair. So that will also determine if I need to use Sortino or Sharpe, and so on and so forth. And that will be automatically built into the analysis as part of the money management. On top of that, I'm also planning to, which really doesn't really apply to a lot of people, but I plan to implement also Kelly criterion to manage the trading account. So if, for instance, my account during the live trading session is getting killed, you run a Kelly criterion analysis, and it will determine how much capital should be allocated on the next round of trading or next session of trading. So if the account's getting killed, you throttle a small amount of capital. Whereas it does the opposite. You have an account, a portfolio or an account that's doing really well, you allocate more capital. So the idea behind the Kelly criterion is to preserve your account, so you're not putting too much money out there when the account is getting killed, or it's not meeting the expected performance, or it's just getting killed overall. Maybe because we have too much volatility in the markets, too many negative sentiment or shocks in the overall markets globally, which are impacting the currency pairs that you can't really predict. So again, you'd want to maybe have less risk and then have the Kelly criterion gauge that for you. So that's pretty well it. The basic mechanics. The last thing to show you is the overall methodology of calculating all these different metrics to combine and overall what's the best currency pair to trade for the next trading session. So I plan to do that. It will combine, as I said, all of these things I'm showing you, up and coming trading patterns, wedges, and flag and pennants that are found in the charts, as well as patterns, because the patterns are historically used by a lot of professionals, and what you can expect based upon the what the charts are saying, based upon the pivot points or the peaks and valleys of the time periods that you're looking at. And that will again be fully automated. Now you're probably thinking, will I build machine learning into this? I'd like to, but it may be enough for to keep it as is with a simple technical analysis techniques. As I said before in my past videos, that the technical analysis seems to be proving itself oddly. On top of that, that's what the market's using. A lot of professional traders are using, and fewer are using machine learning and quantitative analysis. So it's an interesting quote that was sent over to me. If you want to build wealth, use the math. The data as such as this will help you feed yourself. But if you believe in the hype of math, you'll starve. So what that's basically saying is you need to use techniques that work. You have to use the data that works, knowing how to properly use it. And if you do that and you're using those techniques, you'll be able to do well in trading. Whereas if you are the kind of person that believes in just hype, i.e. Machine learning, quantitative stuff that is not fully proven on the long term, then you're going to starve. And so far from what I'm seeing, that is the case. I can't really say that you can universally say, oh, I can use machine learning for everything in my trading. No, I can't use quantitative for all my trading, because market conditions change so much, so fast, especially on the 1 minute and sub-minute or tick level. I've proven it to myself over the last 3 months. I was not able to really build anything because it's just too much noise, too random. But here, I'm hoping that with these different periods that we look at, there's some predictability of that, and we can verify that by using the historical data, by looking at trends and statistical and all the other moving averages and stuff, all the popular techniques. So hopefully this will work, but we'll soon see. But I thought I'd just bring it to your attention. Hopefully let me know what you think and what I'm doing wrong or right. I'd be appreciated. Talk to you later.